Hello guys, it's a boy General Loans. On this video today I'm gonna be showing you how I approach day trading with my simple SMC strategy. It's very simple, not complicated. I just use a 5-step sequence, namely number 1 being identifying my directional bias. My number 2 is identifying my swing points. Number 3 is identifying my internal shifts like break of structure, change of character, high, low, equal low, all of those things. Step 4, identifying liquidity to be avoided or to be targeted. And then step 5, finally, I identify my point of interest, my imbalance, and my order block. So without any further ado, guys, let's hop straight into it. So yeah guys, we are now gonna go to step 1. Step 1, we identify our directional bias. Then now if you can put a trend line here guys, you can see that this is our trend line liquidity. The market keeps going up in a series of higher highs and higher lows, you can see. So now we know our direction is a bullish direction. So step 2, we are going to identify our swing points. This is our swing low, this is our swing high, this is our swing low, swing high, swing low, swing high, swing low, swing high, swing low, swing high, and so forth. So you understand guys. And then from this point, now we are gonna look at what? Step number 3. We are gonna focus on the internal shifts. That fosters us to focus mainly on the current market structure. We are going to shift to a current market structure and just focus on our internal shifts. We don't focus on the directional bias, we focus on the internal shifts. Because fine, we know that the market is eventually gonna push up, but right now we are focusing on the internal price action. So we're gonna hop to 15 minutes time frame. When we get here, we can finally see that okay, fine, the market from this point, it made what? Liquidity. This was liquidity, this was liquidity, made liquidity, and it swept it off with these candlesticks. Swept it off here. This was liquidity. After that, it made a low. It created a what? A low. This was the low, and this low was what? Was violated. This low was violated. So this is what we call now change of character. So now we know that we have what? Change of character. Then the market is now gonna sell on smaller time frames. We do not forget the directional bias, but now we are focusing on the internal shifts. We are going to buy as soon as the market gives us a what? A break of structure or a change of character going to the upside. Currently, we are going to focus on this. Right now that we know that we have what? Change of character, we are going to look for the last what? The last bullish candlestick before the bearish impulse. You understand? That's what we are going to look for, because already we've seen like liquidity, and that was our what? Our step 4. This was our liquidity. This was, let me put it back. This was our liquidity, which was swept, and then now we know that we have a what? Our sell side liquidity. Now we have our what? Our sell side liquidity, just right here. This is a very strong zone. It's a demand zone. That's why we say it's liquidity. So now we know that we are supposed to target this liquidity, but from that we understand that SMC states that the last bullish candlestick before the bearish impulse, just right after the break, that's our what? That's our order block. But before the order block, we are going to highlight our imbalance. We have inefficient price action around this zone. There's inefficient price action, and then there's also what? Our dear order block right here, the last bullish candlestick. So now I know I'm gonna target what? This sell side liquidity, mitigating what? The buy side liquidity. Without further ado, I'm now gonna say what? Taking my short positions exactly from this zone. Taking my short positions. My risk reward ratio It's going to be very, very high. My stop loss right above this wick. This is the trade that I'm waiting for on Monday, because today is a Saturday. I decided to focus on the charts. So it's pretty easy, guys. Our 4 steps is now done. We know what to do next in the market. We know what we should do next in the market. Even though this is my TP, if I go further to analyze this, I will highlight the fact that we have another break of structure right here. So now I know that for a fact the market will want to come here after this break of structure. As you can see here, we have a very huge imbalance in the order block. This is our imbalance, marking my imbalance, and then marking my order block. This candlestick is the order block. This is very simple, guys. You don't even need to use a PC around this zone. This is where the market is gonna come, right here, and then from this point the market is going to shoot back up. It's going to shoot back up. So what I'm saying is, this was just the market making a swing low. The market is just gonna come here and make a swing low. After that, we shoot high. We might even create newer highs. Yeah, so that's it, guys. Yeah, guys, thank you for making it to the end of this video. If you want me to keep continuing with the content, please like, please subscribe, comment if you have to. That's where I'm gonna get my strength to come back to this channel.